Hello student, I am Sanjay Goel. We will be discussing on the chapter 1 accounting for management. Management and cost accounting. We will cover the following topic. What is the cost accounting? Why manager needs the cost information? Why is important? And what is the difference between the cost accounting and management accounting? What is the cost accounting? Cost accounting, it's a system of record and track the cost, calculate the cost of goods, services and activity, evaluate the how resources are used. Why managers need the cost information? To know cost, profit, investment of each product and services, help in decision making, provide detail about cost, revenue, profit and investment. Why is important? Provide the financial performance information, help manager resource efficiently, support planning for future operation. Cost accounting is the part of management accounting. Management accounting builds upon the cost accounting. Both are often used interchangeably. Financial accounting. We will cover the following topic: definition, purpose, main duty, use of information, and limitation. What is the definition of financial accounting? It is the recording, summarizing the financial transaction in periodical statement for external user. So it is used for external user. It is a periodical statement. It may be 1 month, 6 months, 12 months, and it is the recording and summarizing. Purpose. What is the purpose of this financial accounting? It is used for the external stakeholder for analyzing the financial position. Main duty. What is the main duty? Main duty is the bookkeeping and financial statement as per the law and accounting standards. User. Who is the user of this information? Investor, creditor, and regulatory body. Limitation. What is the limitation of the financial accounting? Information is insufficient for internal management. So the information which provided by the financial accounting, it is for the external user, not for the internal management decision making process. So if we need the internal management information, we need the cost accounting system, we need the management accounting system for making decision making. What is the management accounting? What is the financial accounting? So the area we will cover: information mainly provided for, purpose of information, legal requirement, format, nature of information, and time period. The management accounting is for the internal use, for planning, controlling, and decision making. There is no legal requirement, and the format is decided by the management because it is useful for the internal purpose. Nature of the information: it may be financial information, it may be non-financial. The time period: it is historical and it is for making the decision and it is forward looking. Financial accounting: it is for external use, shareholder, payable leaders, bank, governments. The record the financial performance in a period, the financial position at the end of the period. So the financial information is kept for something, for some period. It may be 3 months, 6 months, or maybe the 1 year. The limited companies must produce the financial accounts. So there are limited companies which is mandatory for producing the financial accounts. Format are fixed. Format are fixed. That gives a true and fair view, and it is as per the accounting standard and company law. The nature of information is the most financial hota, and time period mainly historical records. Data and information. We will cover the following parameter: definition, state, purpose, uses, relationship, and common confusion. Data. Data. What is the definition of data? Data is in form of numbers, letter, symbol, raw facts, events, and transactions. State. Unproceed and recorded but not yet structured for use. It means the information which we will get, it will be unproceed. It is only recorded, but it is not in the structure format. Purpose: to capture the event and transaction. Uses: it's like a raw input. Relationship: when we get the data, we will use for the information purpose. Often used interchangeability with the information in everyday language. When we use the data information, generally we use the words both interchangeability. Purpose: the information which, when the data is structured and meaningful, it is useful for the decision making. State: proceed, organized and structured for the understanding and interpretation. Purpose: it is for the purpose of decision making. Uses: used as output that help user make information decision. Relationship: derived from data by eliminating details and presenting summarized for easier comparison. It means when we data put up in a structured way and eliminate the details and unnecessary information, it is called the information. It means there is a relation between the data and information. Common confusion: actually it is used as a reports of data, but when the data is in form of structure, it is called the information. What should be the information? What attribute of the good information? It means the quality of information: accurate, complete, cost effective. So the information which we will get from the data, it should be accurate, complete. The information should be complete of each aspect. It should be cover everything which we need to make the decision. The benefit of information should be greater than the cost of creating it. It means when we get the information, when we get the data, the cost should be less than the which we will get the benefit from that information. Quality of information: understandable, relevant, authoritative, timely, and easy to use. So the information, the criteria of the good information, the understanding of the good information, it means the information, the data should be understandable. It should be relevant because the information which we will getting, it should be relevant. Irrelevant information, we on the basis of irrelevant information, we cannot get the decision. Authoritative: the information which we are getting from the source, it should be authoritative, and the information which we are getting, it should be get timely for the support of the decision making. Easy to use: information should be Like this, it should be easy to understand. It should be easy to use. What is the business objective? It should be established through the mission statement. There are four parameters of the mission statement. What is the purpose? What is the strategy? What is the policy and cultural values? There are four basic key elements to describe the company objective through the mission statement. Purpose. Why the business exists and who does it exist? What the business provide and how it is provided? What is the expectation from the staff? And what is the core principle of the business? So there are 10 parameters to overall achieve of the objective and aims. So the mission statement should cover the following parameter. Brief statement, not more than one page. General statement, specific aim of the organization. What will be the organization operation area? Statement should be open-ended, does not include the commercial term, not the time assigned, at which period the mission will be complete, form a basis of communication to the people inside the organization and to the people outside the organization. तो information का basis, what should form of basis of information to the people inside the organization and to the people outside the organization. So both people inside and outside, the message should be conveyed properly, used to formulate the goal statement, objective and short-term target, guide the direction of the entity strategy such as is part of management information. What is the planning? Definition of planning area we will cover. Importance of the past information example. So what is the definition? The objective of an organization and formulating the relevant strategy to achieve them. Importance of past information. That information on that information we can take the decision what is achievable in the future. Example, a manager planning future sales volume need to know past sales volume to guide the decision making process. If a manager know how much sales we have done in the past 2 years, 3 years, we can take decision how much volume we will sell in the future. So that's called the planning. So there are three parts of the planning. One is the short-term planning, second is the long-term planning, and third one is the strategic planning. Third one is the operational planning. The planning should be smart, means specific, measurable, attainable, relevant, and timed. The parameter of the planning should be cover the following. Level of planning. Strategic planning. There are three different levels of planning. These three levels differ according to their time span and the seriously of the manager responsible for the task involved. Strategic planning. Strategic planning is part of the long-term planning. It may be called the long-term planning. The nature is the 5 years. Who is responsible? Senior manager. Level of information. Strategic information is mainly used by the director and senior manager. Profitability of the main business segment, prospects of the present and potential market. So the first part of the planning is strategic planning. Tactical planning. It means short-term plan. It may be the 1 year. Who will use middle level? For tactical planning and management control effective, such as pricing, purchasing, and distribution stocking. So the, the planning involved related to the pricing, purchasing, distribution, and stocking. Operational planning, day to day. This planning is related to day-to-day decision making process. When a manager takes the decision on day-to-day basis, it's called the operational planning. What is the level of information? Information level is based on the listing of debtors, creditor, payroll details, raw material requirement and uses. So it is related to the day-to-day decision making process planning. Decision making. First part of decision making is the planning and second part is the control. So decision making is a process of making decision. Decision making involves making a choice between two or more alternatives. If there are two or three alternative available, what will be the decision a company takes? It's called the decision. Manager needs reliable information to compare the different course of action available and understand what is the consequences might be the choosing each of them. It means when a manager takes the decision of the more than two alternative, he should know if he takes the decision one of them, what will be the consequences of that decision? What will be the action to be taken of the alternative choice? Control. Information related to the actual result of an organization is reported as the manager. Manager use the information related to the actual result to take control measure and to reassess the amid their original budget of plan. When we make the plan, if there is no plan, there is no control. So it is the part of planning. If there is a planning, so there is a control. Internally sourced information produced largely for the control purpose, it is called the feedback. The feedback loop is demonstrated in the following section. Information related to the actual result of the organization is reported to the manager. Got it? The role of management accountant in MIS. MIS is Management Information System. How a management accountant works in an organization. He makes the annual statutory accounts, budgets, forecast, product profitability, cash flow, investment appraisal report, standard cost and with the variance report or returned on to the government department. So the information, it may be regular basis, on monthly basis, or for the special purpose. What is the relevant cost and revenue? Revenue, cost and revenue. Not all information produced by an accounting system is relevant to the decision made by the management. If a manager takes the decision, the all information which is provided in the accounting system is not relevant. Particularly information produced mainly for financial reporting purpose and then taken as the basis for management decision will often need significant modification to use the information to use to the management. If the company takes the decision, if the manager takes the decision, he has to modify the financial reporting system, financial reporting for the purpose of decision. The criteria of the decision, the criteria of decision on the basis of three principles: future, incremental, and cash flow. The principle is that the figure presented to assist in management decision making are those that will be affected by the decision. It means if a management accountant take the decision of some figure, thus there should be effective in the future. The cost and revenue that are going to be incurred sometime in the future, cost and revenue that have already been incurred, as known as the sunk cost, are not relevant to the decision to be made. It means which cost and revenue which are affected by the decision, which will be incurred in the future, it is relevant information. If already we have incurred any cost, it is not relevant for the future decision making. The extra cost and revenue that is created as a result of the decision taker. So the information which is incremental, which is effect to the decision, it should be incremental. Cash flow. Actual cash being spent on received not monetary items that are produced by accounting conversion, books or carrying value depreciation charges. So that is also irrelevant for the decision making. If a management accounting takes the decision, depreciation charging, books or carrying value is not relevant. The relevant information is the effect on the cash flow. What is non-financial and what is external information, we will understand on this slide. Non-financial information, in this information, we don't have the numbers. It is more related to the qualitative, motivational, environmental. Its affect the this information we cannot estimate, quantify. It is related to the behavioral. Whereas external information are affected with the external environment. External environment includes the government action, competitor action, customer demand, and other factors. For example, weather. So, such information which is outside the company is called the external information. That information also influence the company operation, company decision. So in the management decision, company should take these two factors also while making the decision, non-financial and external information. Thank you very much for watching this video. I hope you have liked this video. Please comment on the inbox. In the next chapter, we will learn the cost classification. Thank you very much.